Mike. And
Hey, Julian.
guys, I'm here with Mike from Traders Post. And Traders Post is a YouTube channel and it's also a platform. I would like to talk with you, Mike, today about, as I told you before, about Bitcoin, altcoins, and about ETH, because Ethereum has an approval of ETFs today. I would like to cover Bitcoin, your perspective on Bitcoin price right now, because we are after halving, after pretty pretty big move past year for Bitcoin. And I would like to also cover maybe your strategies. I know that you are trading with artificial intelligence. May I say, may I call it right like this, right?
Well, I think there is a big distinguishment between artificial intelligence and machine learning. So we'll put it into the machine learning category.
Yes.
It's highly numerical, highly statistics based.
Yeah. So basically, what is the difference? The main difference you are saying between artificial intelligence trading and machine learning trading?
I think with artificial intelligence, it's helpful to understand it in the context of it being kind of trained on the world of information, right? Like something like OpenAI is much closer to what we would consider generalized artificial intelligence, where its context and understanding of all of the variables, all of the nuance is much wider than something like a machine learning model. With machine learning, you're basically just developing in a very large statistical model. You're taking a lot of inputs and you're trying to predict an output. And there's nothing very nuanced about that unless you incorporate those variables into your model. So I think there's a giant departure from machine learning concepts and what it's able to do versus the evolving world of AI. That said, AI is a very big buzzword. People like to use it because everybody gets excited about it. But I do want to specifically clarify that the work that I've done in writing strategies in crypto was specifically machine learning using XGBoost, which is a library for decision trees. It's a fairly complex machine learning library that does very, very good at predicting target variables.
So I would love to cover this topic right now, but maybe first let's talk about your prediction about Bitcoin and ETH,
Sure.
or maybe you have some predictions from your algorithm, from your machine learning algorithm that can predict or maybe tell us.
I think my personal opinion or my view on the long-term trend of Bitcoin is probably more accurate than my intraday models. The strategy I run with machine learning is on the 5-minute time scale, and it basically ignores the larger macro trend, any of the external exogenous factors. All of that stuff is kind of ignored. So I don't have any big signals going off right now that are telling me much of anything that goes beyond an hour and a half. Most of the trades are fairly fast in that particular strategy.
All right.
But my personal opinion is a little different. I've been watching this move to the upside in Bitcoin and Ethereum for the last year and a half. I've taken a lot of profit off the table already. I'm starting to wind down some positions only because I'm still kind of in the position that we need a healthy retrace before we see the next move up.
Can you show it on a chart, or
Sure.
maybe yeah? Just I'm curious about things that you are trading right now, or your perspective. So show whatever you
Absolutely.
want.
Yeah, so we can talk about Bitcoin. We can look at the Ethereum chart too. For a little context, I am a fairly diversified investor and trader, so I'm kind of all over the map. I invest in a long portfolio of ETFs. I trade futures intraday. I have the machine learning strategy in crypto. I have long-term portfolio in crypto as well. There's a big hodgepodge and kind of multiple things going on at the same time. But let me just show you my view of Bitcoin here. Let's see. Let me share my screen. So hopefully this isn't too hard to see. I'll make this a little bit larger. Um, My main strategy for watching Bitcoin is basic support and resistance, as well as basic trend following. So, we could monitor this trend to the downside for a long time, and basically, I was just looking for breaks in support to the downside until we started to see a good consolidation zone here back in December of 22. And part of that consolidation zone was led with a big spike in volume that was also very interesting to me. In general, I like to watch spikes in volume
Mhm.
that go well beyond 2 and 3 standard deviations of rolling volume. And those are big indicators to me that we've seen a big liquidity move. This is a good example of recent volume in March of this year that was a good indication that we were moving to the upside, and that sort of led this recent 40% run from a peak of 54 up to where we are now. So that initial volume indicator, as well as the formation of support and resistance here, was one of my first indicators. Started to measure a trend from here. And then I do something called box trading, where I'm effectively looking for the high and low of the
Yeah.
chart. Where did we see resistance, and then
Mhm.
breaks of that resistance up to the upside. And I'm essentially just following these boxes along. So in this first phase here, I started to build up an accumulation of multiple cryptocurrencies in a portfolio. Started to add to that when we saw the retrace in this first move here. I'm also really big. I use Elliott Wave as well as Fibonacci. So this was a really good retrace in this zone here to build up in an additional position and add to it. Plus, we had bounced off the trend line. And then once we broke that resistance level again, it started to get really interesting at that point. So the long-term trend is that since December of 22, we've started to see this really gigantic move to the upside. But I'm starting to get a little interested in whether or not we're going to see some kind of a healthy retrace in this market, because if we've seen the peak already, just under 74K, I'm expecting that we see a little bit healthier of a retrace than just past the 236 line on the fib. And let me put this on logarithmic so it makes a little more sense. On the log chart, we barely even went below the 236. I would expect a healthy retrace back to the 0382 or the 05 line for fib, in order for this to truly be a zone where we can start to see reconsolidation of positions and a move to the upside. With fib retraces, I would expect we would see a good healthy retrace, and then confirmation to the upside from here after we sort of pass above some moving averages again. Um, and we're just not seeing that yet. And so I'm kind of monitoring this downtrend that we're seeing. We have posted one lower high and now a second lower high. And I think it's possible we could start breaking some support levels in this box. And if that's true, then I'd be getting real interested in crypto as we retrace again. From a 3 point trend, or excuse me, a 3 point fib extension perspective, that would place. Let me show you this real quick. If we look at this entire move and we expect it to come down to this zone over here, maybe the 0382, maybe the 05, let's just assume somewhere in the middle there. Well, anytime we see a fib retrace like that, the fib extension tells us pretty much where we're going from here. So I've seen many calls on Bitcoin pushing well up to the 100,000, maybe even $200,000
Mhm.
mark. If we don't see a healthy retrace
Mhm.
down to the 05, 0618 level, I mean, it could be as high as the 200s. I'm looking at the 1.2 line as a target for a typical extension, but I think the upside is anyone's guess at this point.
Yeah, upside, yes. I'm curious about what do you think about ETH right now?
Yeah,
Because
let's take a look at the ETH chart.
today there will be decision about.
I think there's no question that on the Ethereum chart, we're going to see a lot of activity just because the news is very exciting. However, ETH is also kind of following this same downtrend at the moment. Let me pull up my trend tool here. We've already seen one lower high posted, and now we're testing the second lower high. I'd be concerned that if we can't get past this level and actually push beyond the trend, that we may not see much further upside with Ethereum. There's a lot of excitement around that kind of news, but ultimately there's going to be a question of how much seller exhaustion really, or excuse me, buyer exhaustion really exists out there. One of the indicators that I do keep track of is overall global liquidity, which gives me a sense of how much capital is really available in the world to push into all markets, not just crypto. And there's a very strong correlation between the overall price movement on the linear chart relative to where global liquidity is. As global liquidity starts to contract, you can see that correlation with downtrends in Bitcoin and Ethereum's price. So one of the things that I'm noticing right now is we're kind of up against this resistance level on global liquidity where the amount of capital flowing through markets is starting to contract. So I'm keeping an eye on this as well. If there isn't enough capital available or it's moving back into markets again, I'd be concerned that there's just not enough buyers available to keep pushing the price up.
And there will be elections in November in US.
Yeah, that could be a good event for sure.
You believe that Trump can push the price higher of crypto assets if Trump will win?
Sure. Traditionally, Republicans typically have very stimulating effects on all markets. There's obviously a lot of additional tax incentives that come with that increase earnings for companies. In the crypto market in general, I think that it's a very news-driven type of asset, and we'll see a lot of excitement around that kind of news for sure.
Oh yeah. Do you believe that until November, crypto assets can go higher because of that speculation?
I do. I do think we're going. I just still think it's possible we will see a retrace of some kind. I don't know how far or how deep, but we do need to see some kind of healthy correction. Then the establishment of a new trend that could probably take us into potentially August, September, and then from there it's pretty much anyone's guess what stimulates a move to the upside from there.
Mm-hmm.
It's probably worth kind of pointing out too that like the cycles in crypto are pretty interesting. If we look at this on a linear chart, this is effectively the year to date returns of Ethereum, and I've been watching this for many years now. One of the things that's been interesting to me is just how little the price tends to move anymore relative to the way it used to. I've been around in the crypto market since 2012, and early on there were incredibly large moves in the market that just don't seem to show up anymore. The stability of the asset is getting less and less volatile over time, even as we watch like the implied volatility in the options market. But if we're just looking at the year to date returns, we can kind of see that the glory days of 8,000 or 10,000% returns in 2017 have just never come back again. And since then, each year, the year to date returns get smaller and smaller. So for a run like this, will we see another 500% move to the upside? It's a little unclear to me. It's kind of the same story with Bitcoin. If we look at the all-time history of Bitcoin's price, we originally saw massive moves in crypto's price back in 2010, really big moves in 2013. This is a 10,000% move. This is a 2,000% move. And as we move forward in time, this is 300, 128. Last year was 160, and we're up 68% so far this year. I think that the ability for price to move largely comes down to the number of participants and the number of participants that are playing both sides of the trend. We have a lot of short sellers, a lot of futures market activity, a lot of options market activity that kind of has stabilized that overall upside volatility.
And what about machine learning that you have? You are coding it by yourself?
Yeah, so I have a very lengthy background as an engineer. I started programming when I was in my teenage years. The 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 process for getting into that really came down to trying to understand how much data was available in the crypto market originally. So some of the machine learning algorithms that I put together started in 2016, 2017. And I was really noticing that one, you didn't have to pay for this data like you did with the stock market. All of the price data is freely available. Two, there were massive inefficiencies between the bid ask spread. And that was largely because it seemed like many of the market participants were willing to pay this bid ask premium just to get into a crypto position, regardless of what the cost was, because the upside was so great. Well, that difference, of course, led to all kinds of ideas. Was there, market making opportunities? Was there exchange arbitrage opportunities? Was there, even just following trend or jumping onto some kind of mean reversion approach? So early on, my first strategies were really around exchange arbitrage, just monitoring the price between multiple exchanges, trying to predict ultimately what the likelihood was that there would be some sort of reversion to the mean between those two exchanges by observing their differences over time. And that became quickly difficult to do. Lots of exchange arbitrage players kind of entered the game, so that inefficiency got sucked up pretty quickly. So then I started developing a strategy sort of on the lower time frame based on price action alone, but I was looking for the high volatility pairs. So sort of ranking those pairs by how far they would diverge from the mean, and then look for an opportunity to predict where we'd go to the upside from there. This is actually done with a partner of mine. He has a strategy he's developed, which is a basic mean reversion strategy, and it's based on a number or sequence of down selling events that occur, and we're just looking to see how many selling events need to occur before we're ready to enter a position again. So we looked at all kinds of variables. We'd look at, historical drawdowns, historical standard deviation. We'd start to incorporate overall distance to the mean. And we built a model that fairly well accurately predicted the best entry point for those
Mhm.
types of mean reversion strategies. It
But
ran for,
can I ask a question?
yeah.
So when you build in these strategies, the strategies. What kind of data are you using? You are using only data based on prices, or
Mhm.
something different, something more? For example, on-chain data or exchange data, or other types of data. I mean, because you told me about deviation, median, etc. I guess that these types of indicators are based on price, right?
Mhm.
So what kind of data, not indicators, but data you are inputting into
Into
these
the model. Yeah.
models?
At the time, all we needed was price and volume. That was it.
Oh yes.
We tried to incorporate
And
some
right
order.
now it's still price and volume still,
Price and volume, yeah, and it's still
and
still
it's
working pretty well.
incredible. So it, it's incredible that it's working, yeah. Because I guess it's working.
It's working. Here's where you're probably sensing a little hesitation. It worked better in 2017
I guess so. Yes.
because volatility was so high, and we could grab these mean reverting trades that would still allow us to protect the downside in capital. As the crypto market has stabilized and become a lot less volatile, the buy and hold approach has actually beaten this machine learning model because we sit in cash until we're waiting for volatility events, right?
Yeah.
So the model itself is great. It does still perform. It has a high win rate and a high profit factor. But if you were to just buy and hold a basket of cryptos in your own portfolio, you would beat this particular machine learning approach.
Hmm. If I were to go buy Bitcoin, if or Doge, if I would buy, for example, BitConnect, probably not,
Well,
or
maybe,
Luna.
yeah. I mean, I guess that's why I refer to a basket of cryptos and not just Bitcoin alone.
Basket.
For yeah, I
Yeah,
usually I usually
but
will hold 30 to 40 cryptos.
yeah, basically, I have to argue with you because since 2017 or 2013, most of the cryptos in top 20, etc., are out of top 100 right now. Most of them are lost 90% of the value.
That's right.
So I will argue that just getting a basket will make us profits. Probably not.
I guess it depends on how far down the list you go. I think what you're describing is something like a survivorship bias, where if we look back at the history of all the cryptos since 2012, there are a large number of those pairs that are no longer even tradable or even available on the exchanges anymore. OmiC Go is probably an example of one that I held back in 2014 that's not even available on Coinbase anymore. In fact, I have a small amount of dust that I can't sell on
Yeah,
Coinbase anymore.
yeah.
Um, And I think you're right about that. So I think rebalancing on a frequent basis gets you out of trouble in that perspective, where if you do
Yeah,
have one that's heading to the downside, you've already sold it off out of the portfolio and started to add a new member to the portfolio again.
yes, true. Rebalancing. Let's just take a look at this chart, at this snapshot from
Sure.
2017. Can you see this?
Yes, I've looked a lot
Yes.
at these historical snapshots
Peak
to look
of a
for the dying
bull
members.
market in 2017. So
Yeah.
what we have right now, Bitcoin is here, Ethereum is here, Bitcoin Cash far away. XRP, yes, it's here. Litecoin, not so much. Cardano, IOTA, Dash, NEM, Monero, Bitcoin Gold, Stellar, EOS, Neo, etc. Yeah, most of and
I see some
BitConnect
names that
and
aren't there
BitConnect.
anymore. I remember Waves had a lot of promise back in the day, and that
Yeah,
one's no longer
most
listed.
of them.
Yep,
And Tether, look at Tether. Yeah, but it was the beginning of Tether,
correct. And that of course wouldn't be in the basket because it's a stable coin.
of course.
But yes, I completely agree. And this is where I defer back to the rebalancing approach. That would allow you to kick loose the members that are ultimately on the way out
I
and
have
start to add back in the pairs that are.
I have another question, because
Sure.
I heard from you that you referred to keeping 40 pairs, 40 different pairs, right?
30 to 40.
It's 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 plenty of different coins. I'm talking with my friends and people in the market, and I see this trend that many of traders, investors, etc., hold so much coins, 10, 20, 40, 30. And I'm amazed by this. So oh wow. Oh wow.
Heard the word amazed.
Nice. One more time, yeah. Amazed. I'm amazed. Nothing. I don't know how it works. Okay, so I'm amazed by this, because I'm I'm totally on the opposite side of the strategy,
Mhm.
and not to hold more than maybe 3 or 4 coins, maybe 5 maximum. Why? So I will tell you my perspective.
Okay, sure.
My perspective is that if I am holding 10, 20 or more coins, I just cannot follow each of them. What do I mean follow? I mean, what if one of them will be hacked? What if one of the protocol will be exploited? How can I get this info? So if I'm eager to follow each coin, I need to follow each Twitter, follow each Telegram, etc. Set up plenty of alerts. And in the end of the day, probably I have no time, or I'm still lack of enough information about average coin situation. If I hold 3 coins, of course there is uh, it's not diversity. Yeah, it's not enough so-called diversification. But I can follow each of them. If something is happening, I can react fast.
That's true. I guess my thought process is kind of
Or
pointing back.
or
Go ahead.
just last sentence, just last thought. Or you have so huge capital, millions and millions and hundreds millions of dollars, that you need to do it. But I have my friends who has millions of dollars, but not hundreds millions of dollars, right? So I believe that if you have less than 100 million of dollars, it's there's enough volume and liquidity in the market to hold maybe 5 coins. But why 40?
Because diversification takes away some of that risk that you're describing. If I have 40 pairs in my portfolio or 40 cryptos in my portfolio, only one single crypto represents 2.5% of the
Yes,
portfolio. So
exactly. Yes.
even if that crypto gets delisted or hacked or scammed or whatever happens and it has a 90% drawdown, I'm only losing 2.5% of the overall portfolio value. So that drawdown risk comes down significantly, right? I would be less worried about a single crypto. I'd be more concerned about some kind of a global event, a macro event, or crypto being banned in a country or something
Mm,
like that, some kind of exogenous event that none of us expected that makes it impossible to hold those cryptos or derive any more future value from them.
mm.
So if something like that happened, that would wipe out the entire value of the portfolio. So individual risk gets mitigated by the diversification of having 40 cryptos in the portfolio.
Hmm. I always like to repeat that uh, from my perspective, crypto coins are not cookies. You don't need to get everyone. You don't need to taste everyone, but you have different strategy. I understand it, and I respect that.
But I
On the
think
other hand,
you make a
I won't be able to hold more than five tokens because um, just too uh, too much for me. Too much.
Sure. I think the analytical work that you're describing is sort of also mitigated by the simplicity of a strategy like this. If you're just buying the top 40 coins by market cap and rebalancing every month, you take all of the analytical need out of the equation. You don't have to study all 40 of them. You're just ranking them by a simple rule. You're indexing the entire crypto
Yeah,
market that way, right? I don't have to go and do the research. That's not interesting to me.
yeah. It's like an index, right?
Right.
By
I
the
think
way,
that's
is there any coin that an index like S&P 500 in a for crypto?
say it again.
Is there any kind of crypto index
Yes.
for top 100 cryptos or top 50? Is
There is.
there is?
Pepperstone has a publicly traded, or not publicly traded, but an available index called Crypto 30,
Oh, nice.
which is the top 30 cryptos by market cap.
Hmm. So it's yeah, interesting. And how to find this index?
It's available as a ticker on TradingView. You'll see that they have an index. It's actually a contract for difference, a CFD. And so they track the price of it here. You can kind of see here. If I share my screen again, I'll show you its price. So this is the crypto 30 index over all of its history since it launched in 2020, and you can kind of see where it's showing up right now. As we know, most cryptos are highly correlated. So the performance of this so far this year is at roughly 55% relative to Bitcoin's almost 70%. So you're getting a little less performance out of the market cap weighted portfolio, but it is of course diversifying away some of that risk that we talked about earlier. The upside is just in line with the rest of the market, I think, or it's at least a good accurate reflection of the top constituents of the market.
Yeah, I'm checking that index right now. Wait a sec. I will do some ratio between Bitcoin. So Bitcoin is going faster than this index, right?
Correct. Yeah. This is kind of smoothing out the returns because of its exposure to 30 different cryptos and the
Mm.
rebalancing technique that they use. I believe they rebalance monthly, but I'd have to look at their paper again. This is effectively taking whatever is the top 30 at that particular snapshot in time. So it might have been a different set of 30 pairs in March of 2020, but then today it's obviously going to be a little bit different of a picture. So it's rolling over and moving coins in and out of the portfolio automatically for you. So all you have to do is just invest directly in the index, and you get exposure to the broad crypto market this way. I think it's probably capturing 70 or 80% of the overall market cap of the market.
Awesome. All right, Mike. It's a pleasure talking with you about all this stuff, and I'm curious about machine learning thing.
For
But
sure.
but
I'm actually working on a series of videos right now that explain how to do more signal analysis through TradingView data, and then how to use basic machine learning to analyze which values are the best values to use on intraday strategies. So as I develop that content, I'd be happy to cover that if our paths cross again.
yeah, let's talk. Let's talk soon. Maybe next week. This is your
Absolutely.
channel, Traders Post.
Yep.
And it was pleasure talking with you today about crypto market and exchanging strategies, because this is the point. And not everyone has the same strategies as us and perspective. So I'm learning something from you. Hopefully, you get something from me, or maybe you will get in the future.
Yeah.
And that's all. Thank you, brother.
Absolutely. Yeah. Hopefully one of these days I'll learn how to get enough guts to just put it all in on one coin like Dogecoin. I don't know how people do it.
It's funny about Dogecoin, because probably Dogecoin has a better tokenomics than most of the coins out there. Even though it has inflation, it has flat inflation still, flat inflation. But anyway, it has probably better tokenomics and better distribution than most of technological coins, if we dive in deeper.
Sure. So if you rank all the coins that way, you would be interested in the coin with the best tokenomics. Is that how you've decided on some of your top investments?
Yeah, to be honest, I'm not afraid to put all into Dogecoin.
Okay.
I'd rather be afraid to put all into Solana than Dogecoin.
Sure.
Or maybe not exactly Solana, but for example, XRP.
Okay. Yeah,
And
especially
I will
since
tell you why.
okay.
XRP has 13% of inflation yearly. It's higher inflation than Dogecoin. And to BTC, XRP is still going down lower and lower and lower. Why? Because they are doing, I don't know what they are doing, because nobody is using their applications, basically.
I think what I've noticed about Ripple is that I've only ever had one good run with Ripple. That was back in 2018. I think Korean traders took over at some point, and it skyrocketed to $3.30, and I held it from 19 cents. And it was a fantastic trade, but it's never really seen that volatility since then. It's been mostly a fairly sideways coin relative to the rest.
Yeah. Okay, Mike, thank you very much. And let's talk soon. Thank you, everybody.